Good evening, everyone. Good evening, good evening. Afternoon. It snowed here this weekend and now it's raining. Awesome. So, welcome to the show. We have Google and Amazon earnings coming up this week. We've got gold that's been pumping up through 5,000. Now, the potential for it to pull back. Could it go to 4,000? I guess we'll kind of talk about that a little bit. And then we'll get to the main event that everybody's here for. I'm sure 30 minutes, at least 30 minutes of your requests. Yeah, but we're seeing gold and silver pull back pretty violently today, popping a little bit. Is it going to be a dead cat bounce? As the terminology for a bounce that just kind of doesn't do anything but just bounce a little bit and then flushes on down. It's quite possible. So, I guess before we start all of that, though, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, and it's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you want somebody to tell you what to do, what to trade, how to do it, you can hire and consult a financial advisor. It's not me. I don't pretend to tell you what to do, how to make money. I'm just a guy on the internet who gets lucky on a few things. And I've talked about how a pullback was coming in gold and silver. It didn't really surprise me at all. The bounce doesn't really surprise me at all. Corrections happen in three waves. And it, is the initial three wave it, or does it become part of a bigger three wave correction? We won't know until a little bit later. It's very difficult to tell. We haven't hit any kind of downside supports that would be strong for going higher from here. So definitely need to be careful. Now, like I said, I'm a guy on the internet that makes money doing this thing we do called trading. My 3-month performance, my 1-year performance, and I started this account back here in April with about 75,000. I've put in more, I've taken out some, and the goal is just to make a little bit of scratch every single day. I took a loss a couple weeks ago, made it back, sitting at the account all-time high, basically, of closed trades. Every day, closed trades are posted here. So put my money where my mouth is. I consistently book gains in this account to the tune of all-time history, about $62,000. Look at the 1-year performance, $62,000. So right there it is. I can make a little bit of money in the market and do it consistently, as you can see. So I thought I would dive in, talk about a few things here, the potential for Google, and, starting here, the market is hitting its head. It's hit its head 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day, 10 days. We've kind of hit this level right around 7,000. Having a heck of a time trying to push through on S&P 500. That opens the door for a bigger downside. Now, this is the futures. The cash index looks very similar, but still gappy. It's more gappy than the futures. Still seeing a lot of frustration trying to get through this. And today, that candle may invite bigger downside. So we've got that showing up on the ES. We've got a similar situation, but lower high on Nasdaq right here. And this is kind of cautionary, the way this is all behaving. We have hit the 4-hour roadmap line several times on the cash index. Look at this. We hit once. We hit twice. We hit 3 times. And today, the 4th time. Right there. One of these times is going to give it up, and we're going to go flushing on down to the daily chart. Roadmap line. Daily roadmap line. If you don't have the roadmap line, just click the link, flip sides here, click the link underneath me, go to the channel homepage, watch the video. I give it to you for free. The code is free. If you want a button that you just click and put it on your chart, it costs $5. Links in the description. And once we break down below that 4-hour, we're probably going to take a trip down to the daily. And we haven't been down there since back here in May of last year. Periodically, we go visit that. Once we break down here, we're probably going to take a trip down there. It's just kind of the facts of the matter. Like, we tried to break out, failed, breaking down in here, kind of testing the bottom of this uptrend. Uptrend of lows is something I watch out for. This is kind of weak with only 1 low, 2 low, and now 3 lows. It's kind of weak. Trend lines are the weakest form of technical analysis, but if we get below this, daily roadmap line. Now, if we take a bigger trip down, like what happened last year, we could go visit the weekly roadmap line, and that is a heck of a step down from where we are right now. Talking about a 5,000 point spill right there. That'd be about a 20% correction right now from where we are. So be careful out there. Now look at I have kind of a market dashboard I keep up with. I commonly look at how the breadth and depth of the market is going. And probably look a little bit better if I jump onto the chart that I actually have these drawn on right here. I've got the 80 level and the 20 level. Now we're hanging out right in the middle. This is stocks, S&P 500 stocks above their 20-day moving average. So right now we've only got 55% of the S&P 500 stocks above their 20-day moving average. 20-day is pretty fast, but 55% is not. I mean, it's just kind of like almost right in the middle, like half. It's almost right at the average. You know, half above, half below. So out of the 500 stocks, half of them are above, half of them are below, slight bias up, but this was last up here, and we may see it take a trip down to the bottom. Now, we haven't really busted out of 80 since back here. We touched above, we touched 80, touched 80, touched 80. We haven't been down to 20. We've been making higher lows here, but this may be winding up, coiling it up for a bigger drop in here. And we haven't been down there since April of last year during Liberation Day. Now look at stocks above their 50-day moving average. We did poke out the top. We came down to the 30 zone, came back up to the 70 zone, and this may be setting up for a bigger flush. And then stocks above their 200-day has not touched the top. These are all giant market oscillators. They tend to go from the top to the bottom, back to the top. We haven't taken the 200-day up to the top yet, so this may have more room to go on the bigger time frame, but we may need that smaller time frame correction on the 20 and 50-day moving averages before we can get the energy to go back higher again. Now look at the same kind of thing on Nasdaq right here. We got down really, I mean, that was basically a touch of the bottom. And we haven't, could that have been the touch of the top? I don't know. Like, that's not clear, and that's not clear. Not a clear touch either way. And we're just kind of hanging out just under 50%. And what I find interesting is this is Nasdaq 100. This is a scale of 0 to 100. And somehow we have 46.53 of 100 stocks. If you only have 100 of something and you're on a scale of 1 to 100, how is it not like 46 or 47? How is it 46.53? So I got me here. But sitting at 46.53, sure they do some kind of statistical average, and I just don't understand. But this is starting to be kind of a watermelon seed squeeze. Do we break up or do we break down? That's the big question. Or do we just kind of sit here for a while? Stocks above their 50-day on Nasdaq has been squeezing right down the middle for months and months and months. This is set up for a dip to the bottom. We topped out back here, due for a correction. We topped out back here right after Liberation Day, and then we've been drifting lower with lower highs ever since, due for a correction. And then Nasdaq above their 200-day moving average, still set for a pop. This could have been close enough, and we could take this back to the bottom. And then Russell is a bit more chaotic. We've been to the top, we've been to the bottom since Liberation Day, and we recently visited up here and might need a dip all the way to the bottom on the 20-day for Russell. Small caps here. Might need a dip to the bottom on the 50-day. It might even need, this one doesn't tend to top out. Hadn't topped out in a couple years, several years, almost 5 years. So we've hit the bottom once, twice, 3, 4 times. So this can be kind of topped out for now, and we could come back to the bottom for Russell. Doesn't tend to get the upside super excited. So RSP potentially already hit the target. This is equal weighting the S&P 500. We potentially top this out. So this can invite a bigger correction right here. I thought we might run this on up before we, I was talking about this last year as we came out of Liberation Day, that we might come all the way up here. We did that, and now it can invite a bigger correction in the market. So just generally looking at it, that's kind of the situation right now. And then price to sales ratio is at a ridiculous all-time high here. This keeps climbing. And we're higher than we've ever been before. This is probably going to not end so well. Probably. So I like to look at the price to sales ratio, not the price to earnings ratio. And price to sales is ridiculously high right now. Potentially going to top out just a little bit higher, maybe up in this 375 area. We're almost there, so we could climb this just a little bit further, and then we'll probably take a big spill. So that's what I got to say there. Jumping back over, looking at Google for the week. What do we expect? This is pretty elevated. We went ripping right up, and we've been nonstop ripping here. We have further fib lines up, but this is looking like a pullback is going to be something that happens. You look at it, past times where we've run and run and run, large pullback. Run and run and run, get pullbacks. This, yet another run higher, probably going to get a pullback. It's just, can we stack more on top of this or not? It's not clear. Going higher might be a thing. AMD reporting earnings after the close today and getting punched. I've been talking about how it needed a retrace back to a lower low than this low right back here. Back below 195. Now, all these people posted on social media, it's a double beat on AMD. How can it be down? The price correction pattern here needs this lower low so it can build and go higher. Has nothing to do with, any news. And then we have Amazon potentially reporting, or, going to report earnings coming up right here on Thursday. Potentially upside target. This is a bullish pattern right here. We kicked it off a few weeks ago, right here. Retraced back to the roadmap line, came back up. The only problem I see right now is we have a series of lower highs right there. This is set for a pop right up here. The target 265. The likelihood this plays out based on history, 95.8% that we're going to come up here, hit this target up here. This price pattern has played out 23 times in the past out of 24 times it set up. Once it failed. The profit factor on that, 36, which is just ridiculous. But that's what you get when you have a 95%. So the one time it lost, there's gross profits divided by gross losses 36 times. So now, the only caveat here is this is only 24 trades. 30 is technically a statistical population, and that is less than 30. So you can flip a coin a whole bunch of times. Once you're getting to 24, though, even if we take 6 losses, this is still going to be running higher than the average across tens of thousands of these trades. Average is 75% here, and the average profit factor is 1.2. across hundreds, tens of thousands, hundreds of thousands of trades, different time frames, and tens of thousands on the daily chart, hundreds of thousands across multiple time frames. These numbers stay the same pretty much. And this is looking like it's running a little richer. So I do expect this to pop on earnings. It may dip down to the roadmap line again, but I expect it to pop up here, hit this target eventually. How could you play that? You could play it with the AMZU. I'm long that right now with some shares. You could play it with a debit spread if you wanted to. You could just go at the money on Amazon. They don't have, earnings are on Thursday, so there's no expiration for Thursday, but they do now have daily expirations 3 times a week. So pop over here, AMZN. You look at the options chain. They have them for Friday, so you could play Fridays with a debit spread. If you expected a pop, you could buy a call, sell a call, cost you like $1.20. $2.50 is the max profit. So you could make essentially 100% return if it popped. You could play a similar thing on the downside. If you expect a drop, buy a put, sell a put, cost you $1.22. So slight bias up versus down. They're pricing in the downside just a little bit cheaper. Now the market is pricing in roughly. You can do it either spread, you do it on the 40 or the 30, the 237. Roughly, they're pricing in a $19 move. Sell both sides. This is how poor man's way to figure it out. You sell a strangle, $19 spread. That means pricing in $19 down or $19 up. And that's basically where the market's pricing in for Amazon to move. Lately, in the Mag 7s, we've not seen hardly any of them move the size of the spread. So the market being very efficient in pricing in the move expected. Now, this is just where the market makers expect it to stay inside of. All right. They're pricing it so that you don't make money if it stays inside these rails. And we've seen most of the Mag 7s not move that much. When I say Mag 7s, we're talking about the biggest Nasdaq stocks. That would be the Amazon is the one we're talking about. Google also, one we just talked about, but Meta reported earnings, Microsoft reported earnings, Nvidia's later on in the season, Tesla reported earnings, and most of those didn't really move. Yeah, Apple too. Didn't really move much on the actual earnings. So just churned off. And saw Meta pop a little bit. Didn't really break out of the range. We saw Microsoft drop, but didn't really get out of the range. Tesla didn't really move. So it hadn't been a real money-making opportunity to try to bet on outsized moves for Mag 7s. Anyway, so be careful out there. Bet on that. Now, gold, GC. Come on now. Gold had a pop today off of yesterday's drop, and yes, continuation down yesterday, reached a point and started rallying back up. Now there is resistance at this 618 zone. This initial drop lead to a bounce. Is this going to be a dead cat bounce? And we continue down. That would be my primary expectation. That's an ABC type correction. And this drop was pretty much straight down. Potential 1, 2, 3, 4, 5. 1, 2, 3 so far. We're coming up into the resistance zone. This leaves us with the potential downside. Just imagine if we spiked up to 51.30 overnight. This leaves us with a potential downside right down here at the 4,000 level. On the title slide, mentioned 4,000 gold. If we just repeat that drop right there, that's a common thing that happens on corrections, common thing that happens in the market, period. So what I first started being known as a guru for, echo trades, echoes in the market, repeatable patterns, same size moves. This thing highly likely to repeat this right here. Now, if we get above this zone, it starts tipping the odds we're going up here. Similar to like what Amazon set up. But right now, I would expect a further move down, especially with the nature of the drop on the first drop here with the 1, 2, 3, 4, 5 down. This potential kind of 3-wave up leaves this very much open for another flush out down around this 4,000 area. If we do that, funny enough, I've been looking for that drop into that area for a while. If we do that, this can clean it up and set up gold to run higher again. Silver has a similar but slightly more complicated setup going here. Silver dropped here. Potential in there still for the 4 of 1, 2, 3, 4, 5 down right there. First move up. Doesn't have that next move up though. So we could see silver climb a little bit more back up into the $99 area and then cruise on down some more. So this may be a little more sketchy to be involved in. This would potentially yield a move down to like 57, maybe as low as 50 right down in here. Now, an example of this playing out just recently, right here. Ching, ching, ching. Same kind of pattern, same kind of thing. Had people telling me that it wasn't gonna drop this far, and then there you go. First move down right there, copy it over, right off the highs, and right there we are. Same pattern, same kind of thing. Now, the interesting thing I also think is that the climb here from this low to that high was basically the same as this one right here. And this pullback right there is almost the same size as this pullback right there. Like this one's just slightly smaller right now. Notice, you know, this arrow right there, look at that high to low right there, put it right up here at the high. Got a little bit more to go. And then the pullback is the same size pullback we did back here last year on Hood. Same kind of thing I expect to happen in gold and silver. That's just the way price tends to do on these corrections. So I often look for these, I call them measured bounces. A lot of times they're corrective. Sometimes they go the other way. You know, if we have a chart that's down like this and we find a bounce and a retrace, it can set up an upside bounce. But this right now, looking for the downside right here. Downside on Hood, downside on GC. And that could put us down in the 4,000 area. So if you're betting on big upside from here, be careful on that. I've been warning about the potential bigger correction for a while. We went much higher. And now we're inviting a much bigger downside to gold and silver. Plus it's down at the daily roadmap line. Right there on both of those. All right. That's kind of like the basics of what I had to talk about. Now, for the next, say, at least 25 minutes, we'll talk about your requests. So, rules of the request go capital letters, 1 ticker per person per request. Wait for at least a couple other people to go. Then you can make your request. If you're a channel member, take it easy on the subscribers. You get Ask Me Anything starting at 6 o'clock, and you can ask me as many tickers as you want. And so there you go. If you got a question, please use complete sentences. Avoid this, that, these, or those. And it's like XOM, first one out of the gates. And I'm going to use my trend pullback continuation system to evaluate these tickers. If I don't have much to offer, I'm sorry. I just like XOM popping. There's not much to tell you. Like, we're extending to the upside. Here's the high, here's the low, and we're at the 1618 right there. So we're at a resistance. It's possible we could come up to 155, but we're inviting a larger pullback at this point. Next up, BTU. So we have a big picture. This is kind of a weekly pattern off of this low back here from 2020. We made this move up. We made this retrace. We're making this next move up. There's a significant resistance here, and that could be a correction. Like that's trend down, three-wave correction up, lower high, resumption of the trend down. Now, if we break through above that high, get up to here, do a retrace, it would set us up for going higher. But splitting pickles at this point. Hard to say. We could stall out right here where we are at 40, you know, this 41 could be the high and take us all the way back down, lower low than we were back in 2020. Maybe like, well, there's no way that Trump's going to let that happen. It's in the chart, all right? This has nothing to do with anything, any kind of policy, anything like that. It's just what's in the chart. The resistance is at 41. If we bounce off of it, head down, this can go lower low. BBAI broke down, probably getting a bigger retrace, lower high. Don't like this kind of price action. Very bubbly looking on these rips. It's not conducive for continuation. That's first move down, retrace, second move down. Puts this down back at the lows. Very easily could be heading down to $1.20. Right there. BX, Blackstone. First move down, retrace, next move down. Take it down to 104. There. FTNT. At least everything's not just ripping to the highs today. Let's see. So we're sitting on the weekly roadmap line here. Three-wave retrace. Here's the high, here's the low. If we can get back above 97, 98, looks like 121 on the upside. Right there. And next up, we've got LITE. Yeah, that's just keeps on popping. Looks like we're popping on earnings today. It's being ridiculous, and it's gonna keep ripping until flies too close to the sun, the wings melt, and it all comes back down. Be careful. That's and we could head on up to 700, I guess. That would be the ridiculous less than 1% target there, and then we're probably gonna giant retrace off of that. That's all I got on light. BA, when they don't, you know, I'm a trend pullback continuation trader. When they don't trend and pull back and get continuation, not much I can offer. BA has support down here at 215 and resistance up here at 323. USAR. It's on a lower high. Watch out for the drop back down. Did this once before and brought it all the way back down. Doing it again. And if you need an example of this playing out, right here's what happens. Rip up, come down, rip up, come down, rip up, down. Same kind of thing. So be careful on USAR. It's just being volatile, probably going back down. And CPF. Those aren't trends that are reliable to trade, so you know you're just basically gambling at that point. CPF down at the lows. Can I make out 5 up? Not very cleanly. Looks like 3 up. Trend was down, 3 up. Man, oh man, let's see. Yeah, this is looking like a move down, a retrace, and continuation down to me. I would be very careful chasing that long. Right right there. I guess that continues lower. All right, let's go ahead and fire off the members only stream here in 30 minutes. Sit on the schedule. So in 30 minutes, I'll move to an Ask Me Anything for channel members. If your name's green, you have a little star by your name. We'll keep going. It'll automatically switch over at 6 o'clock, about 30 minutes. So countdown's going. And if you want to join us, if you're just a subscriber on the channel, you can click the $ underneath the video, be a channel member. Helps me and my family keep this going. I don't get paid for this otherwise. So thank you for all of your support for everybody. I'll hang out with the channel members and you can ask me until we're done. So y'all get sick of it or I get sick of answering questions, whichever way it goes first. IBN, India, Bravo, November. It's a downtrend, lower highs all the way across. Watch out for going lower there. As far as where support is, unclear at the moment. So we have a high, we've got the low. If we can get back up through 32, we could go higher, but this is a downtrend at this point. And until it starts breaking up above the roadmap line and staying above it, probably going to continue lower. AAPL. So despite coming up near the prior high, triggering in long entry, it has now failed down and it's hunting for support. We're in a potential reversal zone. First support was that 476. If we don't hold there, next support down 406. Don't hold there. Next support right down here where I have my alert, 320, right down in here. That's what we got on AAPL. So looking for that to hold and turn back higher. If we can get through the roadmap line, hold it. That's the initial indication. Then breaking through the 618 and then upside. Could be up there 790 or so. Pull this down to the low. Yeah, 787. That's AAPL. Okta, OKTA. Downtrend. And I'm not picking bottoms at this point. That's that was a 3-wave up. Continuation. Should be at least lower low down around 72. And RCA thub. I'm not sure what that is. So RCA. Don't see a US listed RCA. HUBB. Yeah, I'm not. Gap. So gap pushing on up. 30. This 32 area is my target. I have a few shares of this I picked up back here and just kind of been selling upside calls. I think I have some 30s sold on it right now. Look for this 32 area ideally. And if we actually get sparky, get up through the 34 area, this could kick it off to higher targets up around 38. Right there. I got put down here at 19 or 20. I've been riding this up for a while. And ticker AI. Looks like garbage. Going down. Going down in a blaze of glory. Where's the low? Who knows? No. Working on that retrace. We got them. You know, we hit the target on the upside, so this is now, but this is software, and software is getting beat down right now. So if we can hold this zone, take it higher again. If we don't hold this zone, might be pushing on down in the 80s. Be very careful here. Yeah, this hit the upside target I was looking for initially off of this low. We got to the bullish upside target, potentially a 5 up. It's kind of sloppy, but this would be a 618 retrace. If we can hold on to it, the potential move higher would be probably up here around 360. But we've got to get up through the resistance at this point, right in here. Gotta get up through that. If we don't get through that, lower low becomes possible. As long as we're underneath that. If we can get above that, potential to come up here. Right now, I'm not convinced. So we have this very weak, as I said, very weak form of technical analysis. This uptrend of lows. If we dip down below that, right down here at 151, probably coming down lower low around 80 on snow. That's what we got cooking. TER, your opportunity to get out was up when we hit the target on snow. So this was a big three-wave retrace from here to here to here. Tag the downside. That high, that low. Now we're tagging upsides and 296, but one of these is going to be the ultimate high. We're going to retrace right there. So 296, 331, 432. The more of these be crazy, the bigger the retrace is going to be. IYT. And $80 and $88 are the upside targets there. That one and that one. What was the upside? Watch out. We're getting close to that 81. So it's IYT, PANW. Just keeps sucking it up here. Made a lower low. Dang. Yep. That one busted. Probably gonna go on a deeper correction. That's what that looks like. So the support looks something like this right now. We're at the top of it. Could come to the bottom of it. If we get to below the bottom of it, then the next down is probably all the way down here. So looking for this to hold in this box, turn higher. But if we don't, probably going on a bigger, deeper retrace down to 100 on PANW. MU, there's no upside. I mean, it just keeps being ridiculous. There's, hadn't pulled back enough to be a pullback. Watch out. Probably going to come back at some point. AI hiccups. This is going to fleece right there. Fleece the market. UNH, looking for this to hold the 618. We've been holding so far. Offered up a longer term synthetic cover call that could be done. You'd buy like a 360 call out to 2028. Sell a upside call, like about a 300, 310. And do that every week. The upside potential up around 600 right here. Uber. And as robo-taxis keep rolling out, Uber probably going towards zero. Robo-taxis and Waymos, and Waymo looking to go public now. Tesla rolling out Cybercabs like crazy. Here's the low, here's the high. This could easily come back down into this zone right here. And then if we dip below it, we could go lower low. And correct that just a little bit. Could be even further down here. That's what I see on Uber right now. And let's see. Just skip the chat to the bottom. That was cool. And go back up. CLF. Cleveland Cliffs. So was this the bottom? That's the big question here. There is not enough candle data to tell us. This is still a downtrend. So far, we've maintained a downtrend. This is just a bounce in a potential continuation of that downtrend. I would be very careful messing with this right here. So we're breaking out above that downtrend highs. 18 would be the immediate bounce, but until we get through that resistance, that still is a downtrend. ELN. Possible to move on up to 32. Bigger picture. There's no trend here, so. Be careful. That's kind of a downtrend. Barely a higher low. This could just be downtrend, three-wave retrace, continuation. We're in the zone where that can get continuation lower. For ELAN. HIG. High low. 142 for Hartford Insurance Company. There's the entry today. 26.69 runs a little lighter than the average. 1.6, a little more than the average on that one. That was on the list this morning for a setup. So if you missed it, I went over that this morning. So there you go. It was on the list. EVTX. Here's the high. Here's the low. Potential entry on a close above 33, 45 target. Stop is dollar below the low, down around 21. Okay. MZ is a leverage ticker and hasn't found any kind of bottom at this point. So 0 is possible. 0. HIMS is the only way you really can chart that, and we would need to hold right in here. If we're going to hold, if we get below that, might be on a trip much further down. Back down around 12. If we do that, that's 50% down. That's 100% down on HIMZ with 2x leverage. So be careful. NVDA. HIMZ was great until HIMS quit trending. And then, perfect example of that was like Tesla right here. When we got this big pullback, went from here to here, 55% pullback. TSLA got slammed right here. This thing went from 40 all the way down here to like 5. That was an 85% pullback. Surprised they didn't have to reverse split it. But the big difference here is that this happened slow enough that it didn't bust this. So the 2x leverage is on a daily basis for most of these. So HIMZ is on a daily basis. So if the drop happens slow, it'll be a slow bleed out further down. But this is getting into a dangerous territory where another 50% down is going to cause this to reverse split or liquidate right there. And based on the assets under management, 100 million, they'll probably reverse split it instead of liquidate. NVIDIA, I cover NVIDIA every morning. Resistance at 195, support at 175, and if we get below that, retest 150. Pretty simple. It's a 618 level from this high to this low. 618 sitting there at 195. That's the upside resistance. 175 is the roadmap line, and 150 would be the target below that. If we get below that, bigger retrace down here like 120. GSE. Probably the targets. Yep. Already hit the target. Potential to come up to 250 or 269. And TLN. And no bottom in sight so far. First move down. Retrace. Next move down puts us down in this zone down here. Dell computers. I bounced off the 50% retrace. First move down, retrace. Next move down, puts the expectation right down in here. Celsius Holdings. Support at the roadmap line. Target up here. Looking for that to hold and bounce and go higher. This may do, in the smaller time frame, may do a 1, 2, 3, 4, 5 up. 1, 2, 3 retrace. And then 1, 2, 3, 4, 5 up. 2, 3 retrace. And 1, 2, 3, 4, 5 up. Like that. Long-term bullish on Celsius. I don't drink them, but there you go. CLX, Calix. There's no trend here. Just sideways. Already did BBAI. You can rewind and find it. MO. Pretty sure I did BBAI. Let's see. Yeah, already did BBAI. And MO has a target of like 160. That low, this high, this low. Well, let's go 100 for now. For that move, then a retrace, then another move up higher. So, gonna for 100 for now. On MO, Marvel. Chips, not superheroes. Got the downtrend in place. 3-wave up. Rejection. Watch out for the lower low. How low can she go? She can go back to 0. First move down, the retrace. Next move down puts it down to 38. There. Be careful. We would need to hold above that to keep going higher. And yeah, right there. So below that low, we're coming down here. Otherwise, we could turn it around and go higher, possibly up to 146. But we got to get above that stuff right there. That's kind of the outline. I've thought this was going deeper for a while. FCX, the upside target is 80 for now. Possible to go even higher over the longer term. The target's 80 right now. And right up here, 86. Levi. I would be careful. This can go deeper right down here to 17. A, B, C down puts us right down here. Talked about that on Market Masters today with Jack. Bitcoin I talked about pretty extensively this morning, and FDX. So FedEx is just rocking and rolling here. If we're looking at the bigger picture move here, this low, this high, this low, There's your upside potential, 426, 527. As far as Bitcoin goes, pop this out. There you go. That's Bitcoin for you. Look for the bottom here. Probably spend a 3 to 5 month rally, then a dip on down to 30 to 50,000 somewhere around October. And this resistance up here around 90 to 115 is the zone. And 30 to 50,000 on the bottom could stop, could find support at 53, but much more likely to go all the way down into this zone. A down, B retrace, C down. So there you go. That was Bitcoin in a nutshell. And next up, JPM. So JPM might have a long-term top in place. This is the initial move down. Retrace, watch for resistance at this 321 area. If we get above it, we could go on up to 343, but this could be a long-term top. So watch out for that resistance. If we can get above it, come on up here. 343, 349, 365 will be upside targets. Cautious. We could have a bigger banking problem kicking off. TGT, long-term downside, is still down around 80 bucks. Got a drawn on this one, I think. Yep. There's the downside right down there. 70 bucks, sorry. 70 bucks. Looking for this to come on down. Had these corrections before. It's just another one. 1, 2, 3, 4, and should dip on down into the 5 here. So looking for a target to get a downside target of 70. Doesn't mean you can't play it in between, but probably going lower. This looks like a biotech. Well, you know, it is a biotech. So be careful on biotechs. Has no real trend. It's been sideways choppy. Lowest low right there. Move up, retrace. It could go higher and still maintain the choppy sideways. Could come all the way up to like 73, but and then still go down. Like, that's the craziness there. Costco, upside target, still haven't drawn on this one. Costco, right there is the path. Target 1100 to 1150. Retrace to the roadmap line, set to go higher. I've had Costco nailed. Like, this thing moves right according to how it should. So has been doing it for years. So should come right up here on the next move. INDV. And let's flip back to the other cleared up chart. INDV. Probably coming back to the roadmap line right there. It's pharmaceuticals, so in the same camp as biotech. I caution biotech, pharma, medtech, med specialties, anything that Food and Drug Administration in the United States gets involved in does not necessarily follow patterns. So anything I say may not work out. Just take a left turn at Albuquerque and do its own thing. Foxtrot November. Retracing to the roadmap line. Came down really freaking close. First move down, retrace. That could be close enough. I'd be looking for a little bit lower, probably down around 394. And then 553 on the upside. It's a pretty darn wide range there. Moving on down, EWY, covered that this morning. There's no real easy way to predict the upside here on a short term. It's been pretty choppy, and we're breaking out, going higher level kind of thing. So 153 might be the next upside resistance. If we're going to be crazy, we could go on up to 202, 247, 317. If we're just going to keep ripping higher. Core Scientific. Turn down at resistance. That's the cautionary point. We did trigger the long. It's a long target 25, but we also are dipping down. If we break below the roadmap line here, then probably go on for a third move down. Downside target at this point would be down around $9. So watch out for that to break below the roadmap line and head on down. Otherwise, that 25 would be the upside target right up in here. And RDWR. A little more complicated here. There's the high, there's the low. Turn down at the 618. Maybe saying, well, what about the close above? Well, there's a lot more candles than I would look at for that. And first move down, retrace. Next move down would put us down at 10. Support right there. If we break below that, we're probably coming down here. Yeah. So that was a corrective move down, a corrective move up, and probably coming back down. Lower high. Probably going back down. That would be my expectation based on that chart right there. All right. Yo, Estee Lauder. Probably go on to a bajillion. Resistance at the roadmap line on the weekly. On the daily chart, we're just keep bouncing, chugging higher. There is a resistance zone. I need to draw on here. Right in there. Up to the gap down. So we got to get through this zone. Could turn down off of it for a little while. This is the potential here. Move up, retrace, and big upside potential somewhere in the 1900 area. Up in here. Got to get through that zone, but then probably cruising on up there. Pretty crazy. That's what it looks like. Estee Lauder. It's a pretty crazy chart. May not work out. Your mileage may vary. Realty income. So real estate investment trusts are a special asterisk. They don't always follow the patterns either. Sometimes they do, sometimes they don't. You kind of have to take in consideration the adjusted dividend, and it makes the chart just kind of no trend. We're at the expensive end of realty income, and would not surprise me to see it take a swing back down, such as we've seen several times for the last 5 or 6 years. It's not exactly a big trender, so be careful out there. And market's back open. We'll be switching over in 30 seconds to the Ask Me Anything stream. Be careful out there on realty income. Now on a non-adjusted basis, got a lot more chaos going on here. This is a slight downtrend and very difficult to predict. So things that pay out a high dividend, relatively speaking, are more difficult to chart accurately, this could easily take a swing back down in here on realty income. And with T, already did that one. ACN.